Today is March the 25th, 2025. Spring is here. And I know I've been MIA for a few weeks, been really sick, really like 2 months sick, which is terrible. I had the flu. But today I'm going to do a market update on the Federal Reserve, which is, they just had a meeting last week. And I thought I should break it down a little bit. The markets have been able to settle, and now we kind of know where we're at. Been also dealing with, as you know, I've mentioned in other episodes, if you follow the show, we're planning a development of really a mix of single family, multifamily, and townhome product. And we're going through the entitlement process, that's the process of getting all the approvals so then you can build from the cities or the counties. And we just had our second submittal with comments. So you submit, it's kind of like a report you submit when you're in school. And then the report has to have all these little boxes checked. And if one of the boxes isn't checked, then they kind of kick it back. And sometimes they even add boxes in the process, which is a little frustrating, but it's just part of the game, right? So it's going to be worth it in the end, but we're doing that too. We just had a meeting with the city to clarify a few things. And I believe now we're on the same page. We should be resubmitting now this week with just a couple little things. And then we will be going next to the next steps, which are planning and zoning, city council, doing a traffic study, and a few other things. So I'll provide updates as we move along through the process. I'm also setting up an Airbnb, really not an Airbnb, but a medium-term rental is the goal. Something on someone maybe rent out for 6 months to a year or longer that's furnished would be preferable. Airbnb is great, but I'm really trying to reduce the operating costs. I know the cleaning is a big one. And then also even the utilities. If I don't have to rent it with utilities, that could also be additional cash flow there. So we'll see how it goes. I'll share some pictures. I've already done a video there. I've shared a little bit of a walkthrough. It's going to be ready this week. A lot of details, getting it ready, but we'll share that more information on that as we move along. But it'll be ready on Friday of this week. So today's the 20th, so in about 3 days. So we're dealing with the renovations of that. We had to do some repairs, just normal unit turn. It's a 2 bedroom, 2.5 bath townhome, and then that's been moving along. Another thing been doing is dealing with a management transition. So we took over the management of our 42 unit apartment community, and we had a third party manager. We really had given it back. We've managed it before, but it would just became a bit tedious. We tried hiring someone, it didn't work out. So now we're back to managing, but we actually hired a new person and they've been with us almost for 2 months now, and they're doing a really good job. They had some experience working with a larger company. So we wanted somebody that had a lot of experience so we didn't have to train them from the bottom. But then we're also just kind of training them on how we like to do business. And I'm really happy, and I think it's going well. And she's learning a lot. She's making mistakes. She's not perfect, but neither are we. But we're kind of going through that process as well. So we'll maybe do an episode on that and managing employees and kind of the process and some systems for that. I think that's a good idea. And then lastly, I'll mention I've been closing some loans. So we have our brokerage operating at full throttle, and a few couple weeks ago closed a loan. I think it was last week Monday. Last week Monday closed a loan. Friend of mine, he's building a property, a single family custom home. Really, it's going to be like a $2.5 million home, and he already owned the land. We were able to get him the financing that he needed to build the home. It was over $1 million. I think it was about 1.1. So that was really exciting. You get to help your friend get the financing he needs, and you get to make some money in the process. It's just a win-win. And he got a better deal than what he used to get before. He's built homes for a long time. And then he said that this was a really good loan that we were able to get from him. So that's really positive. And then this week, closing a loan, finally got it clear to close last week for a loan I've been working on for a few months. And this one I'm really excited about because it's the first loan that I've been able to do, or I'm going to do for a first-time home buyer. So someone is becoming a homeowner for the first time. I know they're really excited, and I'm really excited to help them get over the finish line. I'm partnering with a real estate agent I built a good relationship with, so it's going to be a good thing for them. and everyone involved. So we're excited to close that on Friday. And then the last one is doing another loan, a refinance for a friend of mine who's an investor and he's in Virginia. And we're getting him some financing that he needs for a property that he owns already. And he's trying to get some permanent financing on it. So doing a mix of things. If you're looking for a loan, give me a shout. We'd love to help you. We'd love to help you. And with that, I kind of put it here before we get started with what the Federal Reserve said. If you're looking to buy a home, refinance your home loan, or purchase an investment property or business, Coso Capital can help you get the capital that you need. Contact Denny at cosocap.com. That's COSOCAP.com. Residential or commercial, Denny at cosocap.com. NMLS 388985. And realtors that are listening, we're always looking to build our realtor relationships. All right, so the March 19th Fed meeting went like this. I'm going to tell you about it and then some of the main points, and then I'll tell you what we're doing about it, right? How we're thinking about it as a business owner. The labor market is solid. It's growing. It's stable. No complaints there. The inflation has moved toward 2%, but it is still elevated. So it's still over 2%, but it's not. I think they mentioned it was like in the 2.8% range, excluding food and energy. So it's quite a bit above 2%, closer to 3. But it's moving. They said it's moved toward it because I think it reached 6.1% at one point or higher over the last 2 years. They left rates unchanged, so they didn't change the Federal Reserve rate. They kept it the same. It's at about 4.5, and they kept it there. GDP in the 2024 was about 2.3%, and it's changed a little bit. The projections have actually gone down a bit because of the new administration. Moderation in consumer spending in 2025 is expected, or is being felt and is even expected. And I'll talk a little bit about that. So that means people are buying less stuff. So consumers are people that buy stuff, not businesses, right? And people are buying less stuff, and so are businesses. They're buying less stuff, and because they're being careful because there's uncertainty, right? So businesses are just like people, and people are similar, right? Because businesses are run by people. They don't like uncertainty. They want to know what to expect. And we have a new presidency, a new administration, and they're just changing a lot of stuff. And some of it may be good, right? Because government is expensive, government is inefficient at times. But I think what they're doing that I don't agree with is that they're doing it a bit roughshod, right? Roughshod. They're just, hey, we're doing this, and then that's it, and then we're going to change it, and we're not going to change it. So a great idea would they do if they can keep it, give expectations to the market. Hey, we're going to be doing this within the next 3-6 months, and we're going to be doing this over the next year or two, and we're going to be doing this over the next 3 or 4. So the market already knows this is what's coming. They have time to adjust, right? But they're not. They're just kind of firing people, rehiring people, etc. So we'll see how that works out. 1.7% GDP projection in 2025. It's lower than previously thought in the December projection. I don't know exactly what it was, but I know it was over 2%. I think it was like 2.1 or 2.2 in 2025. 2.3, I think is what it was. And it's going to be 2% GDP growth in the next 2 years. Gross domestic product is what a country is producing. And we as a country have been doing really the most powerful economy in the world as of late. Of course, smaller countries grow at a fast pace, but for an advanced economy, we've really been growing like, bonkers. We've been doing really, really good. But now it's actually slowing down. Rates have had an effect, but also that uncertainty has had an effect. And there's another item that I'll talk about in a minute. Unemployment rate is 4.1%. It's at a historic low, and it's been hovering around there. So it doesn't stay there all the time. It goes 4.2, 4, 3.9, but it's been around in that range, which is really good and stable because people have jobs, people are working, and the people that can't find work or the people that are not working maybe are not looking for work, right? So Actually, it's actually a really good thing when the unemployment rate stays low, especially for a good period of time, because people that have been on the sidelines that have been looking for work and haven't been able to, they can kind of get back into the labor market, build up their skills, and now we have an even stronger economy because people that couldn't find work, now they're working, they're producing, they have more money in their pocket, helps businesses when they buy stuff, everything there. There's a steady jobs to workers gap. It's balanced, right? Before, during COVID, after COVID, there were two jobs, one worker available. Now it's more 50-50, right? So one job and one worker, that keeps everything in balance, even though that wages are growing faster than inflation. So inflation is like 2.8 or whatever it is. But wages are growing at about, let's say, 3%. They didn't say, but if it's going faster, could be three, could be four. It says surveys concerning expectations and data that's showing up in the market by consumers and businesses is showing that they're concerned about tariffs, right? It's showing that, and he was pretty blunt and direct about this. And sometimes the Fed, they kind of work in Morse code. They don't say everything around direct. They kind of beat around that bush, but they were pretty direct. And that is just a big concern, right? Because businesses, they're like, hey, if we bring in additional goods, they're going to be more expensive. People have already felt inflation. Now they're going to feel the cost of goods at a higher rate. So will that cause people to say, I'm not going to buy anything else, or I'm going to limit what I buy? And now that causes a slowdown, which, everybody's scared of the R word, recession, even though they said that it's not expected, but that anything can happen depending on how bad the tariffs become, right? And this is why projections are just so unpredictable, right? It's hard to project because there's so many factors that need to be accounted for in a projection, and things that nobody knows what's going to happen in your projection, right? For example, if tariffs, let's say, go to 100%, right? That will cause a recession probably, right? Or probably guaranteed. But nobody knows if they're going to go to 100%, right? Or how long they'll be at 100%. Maybe that causes a negotiation. I don't know. So that's why projections, I try to be very cautious with saying that, because I just learned it from other smarter people than me that they're not worth that much. You got to be careful. Waiting for greater clarity, meeting by meeting on decision on making rates. So we're talking about projections. They're saying, look, we're doing this thing meeting by meeting. We have a projection. We're saying that we're probably going to lower it to 3.9% by the end of 2025, 3.4% by the end of 26. Currently, it's about 4.5%. This is the federal fund rate we're talking about. But there's no guarantees here, right? This is based on what we're seeing now. This could change. If things go bad, maybe we lower it faster. If things get too strong, then we need to increase rates, right? So then anything could go both ways. But this is probably the most likely outcome. The economy is stable, but people and businesses feel the uncertainty due to the turmoil and the new administration's policies and actions. Kind of mentioned, I'm not going to rehash it here. But someone asked, do you see a replay of 1970s where you had inflation and then slow growth? We call this stagflation. He turned that down. He said, probably not." Then they also asked him about recession. He said that it isn't in the cards either. And then they asked him about a Doge dividend. I know people asking about that Doge dividend, $5,000. And that Doge dividend, he said, I'm not going to comment on that. That hasn't even been proposed. So no Doge dividend as of yet. No comments from the Federal Reserve. So what are we doing about all this, right? Frankly, we're moving forward. I just mentioned we're still moving forward with our development. We're still moving forward on we're building our business on the lending side, the financial services and technology business. We're still moving forward on managing our properties more efficiently and doing things. But at the same time, we want to have savings, and we want to be careful with debt, and we want to have rainy day funds in case something happens. We can sustain it. And when we're thinking about our development, we're going to look and see what rates are at that point, and we're going to see what our cash is available at that point. And maybe, something that I think about is we're going to do our project in phases, right? So we're small developers. We're just, it's me and my wife and our small group of investors. If you want to get on our investor list, reach out. But look, we were thinking about a three-phase project, right? 100, 100, and 200, because it's like a 420 unit property project. Maybe, the first phase was going to be 100, but maybe we bump it down to 50 if we see the economy a little bit frothy, or maybe even 25. In worst case, we will just wait, right? The good thing is we already own the land. But we're watching. That's how I think about these things, just kind of analyzing and see. But we move forward, we get everything approved, but we make sure to cover our bases, have some cash available, etc. I still have some investments in the stock market too. When the market runs, that's why you invest for the long term. The market's been very up and down, but if you're investing for the long term, it doesn't matter. The whole thing about trading that you're trying to time the market, if it's short term, it's been tough, right? I don't know. Maybe you get lucky. All right, so we'll leave that there. Are you interested in learning how to invest in real estate? If you want to get access to my to information, I'm thinking about doing courses. I have some courses in the works. I'm also thinking about doing a live event maybe here where I'm at located, or maybe even at a destination. Reach out, Denny at cosocap.com. Do like a boot camp, real estate investing, business productivity, hit you with some mindset stuff. If you're interested in something, like let me know. I will share what I could tell and put you on our list, Denny at cosocap.com. And then lastly, if you want to send in topic ideas, questions, or examples on how you organize your finances, what you're doing about financial independence, email me. We would love to hear about it, share with the audience. It could be anonymous, Denny at cosocap.com, and we'll go over them on the show, Denny at cosocap.com. So with that, we're closing up. I'm glad I was able to do the episode. Remember to subscribe. That helps people find the show. Like the show. Just press that button. Like it. Just press it. Comment on it. It helps with the algorithm. These AI things, right? And then the last one, share it with 10 friends. Share it with 10 people. Thank you guys. Hopefully you enjoyed that, and we'll see you on the next one when we can do some book reviews, because I owe you that one. So I'm going to be doing these 30 minutes. I'm going to try to go down to. That's going to be allow me to manage this a little bit better until I can get some help. I'm doing the editing. I'm doing everything myself. So kind of bring it down to 30 minutes. And then do a market update, do a book review, maybe do a few other topics and mix it up there. Would love to hear what you want to hear about so I can mix that in. All right, take care. Bye-bye.